Welcome to the Deep Dive, brought to you by TalkTickers. Our mission for you is pretty simple. We cut through all the noise of earnings calls. We want to bring you the most critical insights quickly and clearly. Today, we're taking a deep dive into GCM Grosvenor's first quarter 2025 results. We'll distill what really matters from this significant alternative asset manager, helping you grasp their performance and strategy in just a few minutes. So GCM Grosvenor kicked off 2025 with a really strong Q1. I mean, they delivered double-digit growth across, well, pretty much all their key profitability metrics. What's the single biggest takeaway for you from this quarter?
Yeah, it was strong. I think what immediately stands out is just their operational excellence and that fundraising power. GCM Grosvenor delivered, really solid results, significantly beating profitability expectations and showing off some truly exceptional fundraising. We saw these notable increases in private markets management fees, fee-related revenue, fee-related earnings, adjusted EBITDA, and adjusted net income, all growing by double digits year over year.
Those are some robust numbers. Just to give you some specifics listening in, private markets management fees. They jumped 20% year over year. Fee-related revenue grew 12%, and their core recurring profit, what they call fee-related earnings or FRE, that was up a remarkable 22%. Adjusted EBITDA, a key measure of operational profitability, climbed 26%, and adjusted net income saw a 30% increase. It really paints a picture of very strong financial health.
It absolutely does. And all that strong performance, it led to an impressive 44% fee-related earnings margin for the quarter. That margin, well, it really underscores their efficiency, their ability to turn revenue into actual profit.
Okay, let's dig into this phenomenal start then. What were the core drivers behind this strength, especially on the fundraising side, which seems to be a real engine for them?
Yeah, the fundraising truly was a standout. GCM Grosvenor raised $2.9 billion in Q1. That's their highest quarterly fundraising level in over 2 years, and the second highest since they started public reporting. Roughly half of this capital, so about $1.4 billion, was put towards infrastructure strategies. This included a strong final close, nearly $500 million, for their Infrastructure Advantage Fund 2, or IIAF2. That brought its total size to $1.3 billion, and that's a full 50% larger than its predecessor fund.
50% larger, wow. Now, here's where it gets really interesting for you as a listener. Infrastructure took the lead, sure, but private equity was the second biggest driver, pulled in over $720 million.
Right.
Plus, they also completed the final close of their PE co-invest fund, GCF3, hitting around $615 million, which is, again, a material increase over its predecessor. What does that mix tell us? About where GCM Grosvenor sees growth and maybe where investors are putting their capital right now?
Well, it clearly shows there's still sustained demand for those harder to access private market strategies, particularly infrastructure, right? It offers that blend of yield and growth. And then co-investments in private equity where investors can, put capital to work directly alongside the GPs. This record fundraising also triggered some significant catch-up fees, $7.6 million in Q1. For listeners, these are essentially like a one-time bonus. Fees earned from capital committed before, but they get paid out when a fund has its final close. So it's a nice boost for the quarter, but it's important to note they don't anticipate much in catch-up fees for the rest of the year. It's just down to the mix of offerings they have out there now.
Right, so a nice bump, but not something to bake into expectations going forward. Okay, with such impressive fundraising, the next logical question is how that translates into their overall asset base. How their AUM, particularly fee-paying and that contracted AUM, how did that shape up this quarter? And what does that pipeline signal for future growth?
Good question. So total assets under management, AUM, grew to $82 billion, and the fee-paying AUM portion reached $66 billion. But crucially, their contracted, not yet fee-paying AUM, that's capital committed, but not yet earning full fees, that grew a solid 16% year over year to $8.2 billion. This really provides a very solid foundation for continued organic growth as that capital gets called down and starts converting into fee-paying AUM over time.
Okay, $8.2 billion waiting in the wings, essentially. Now, beyond the numbers, management also highlighted some significant strategic moves for, future growth. What should we know about those initiatives?
Yeah, they talked about two pretty exciting initiatives, both designed to expand their reach and distribution. First, a new joint venture called Grove Lane that's focused on individual investors in the U.S., particularly RIAs and independent broker-dealers, IBDs. And second, a strategic partnership over in Japan. Both of these aim to leverage their, deep investment platform to reach new pools of capital.
That individual investor channel, tapping into RIAs and IBDs, that sounds like a pretty big strategic focus. But what challenges might they face there? I mean, scaling up to reach individuals, that's a different beast than their usual institutional clients, right?
That's a great point. It really is a different model. Management clearly sees it as a massive opportunity, though. They noted they've already raised $3.5 billion from individual investors just since 2020. So the Grosvenor JV, it's specifically designed to build out their team and business for that market. It's structured with an investment that ramps up with success. And GCM Grosvenor also has an option to buy the management's interest later on. It's a structure that helps attract, top talent to navigate that unique market.
Okay.
So yeah, it's a smart structure kind of designed to mitigate some of those scaling challenges you mentioned.
Got it. Smart way to de-risk it a bit. And beyond the U.S. individual market, they're making moves in Japan too. What's the thinking behind that partnership? And what kind of commitment have they actually seen from their Japanese counterpart?
Well, Japan's a critical market for them. It really reflects their longstanding relationships in Asia Pacific. I mean, nearly a quarter of their AUM already comes from that region. And actually, 4 of their top 10 largest clients are based in Asia.
Interesting.
Yeah, so this partnership, it's not exclusive, but the aim is to raise at least another $1.5 billion in assets by 2030, mostly from private market strategies. And as a very tangible sign of commitment, their Japanese partner bought about $50 million worth of newly issued GCM Grosvenor Class A common stock.
At what price?
$13.32 per share. So yeah, a pretty strong endorsement.
Definitely put some skin in the game. Okay, so despite all this strong performance and the strategic expansion, management did sound a bit cautious about the broader market. What specific headwinds did they actually highlight? And what could be the ripple effect on the business if those, persist?
You're right, they did inject some caution. Despite the strong quarter and that robust pipeline, management acknowledged that uncertainty around trade and tax policy is likely to keep deployment and transaction levels, depressed in the short term. This policy uncertainty, and it's notable, they said it's not affecting fundraising, but it could limit the compounding effect on their absolute return strategies, the ARS fee-paying AUM, and it could also slow down private markets deployment.
Right.
It's almost frustrating, isn't it, how broader policy stuff can act as a drag even when a company itself is executing really well.
It truly is. Yeah, we've seen that before. Sometimes the best plans just hit a wall of macro indecision. So, okay, given these potential headwinds, but also the strong Q1, how did management's outlook for the rest of 2025 shape up? And what about their long-term goals? Did anything surprise you in their guidance?
Well, for 2025, they expect their absolute return strategies management fees to be about the same as 2024 levels, flattish. For the full year, private markets fee-related revenue, including those catch-up fees we talked about, that's expected to grow in the mid-single-digit range. So let's say 5-8% compared to 2024. For Q2 specifically, they think private markets management fees will increase slightly over Q1, and ARS management fees should stay pretty much in line with Q1 levels. So yeah, it sounds like a measured outlook for the near term.
Measured near term, okay. Yet, despite that caution, they still seem pretty confident about their long-term objective.
Yes, and this is really critical for you if you're looking long-term. They reiterated confidence in their ambitious goal to double fee-related earnings from 2023 levels by the end of 2028.
Double FRE by 2028.
Exactly. That signals a really strong long-term growth path, despite any, near-term headwinds. Their absolute return strategies business, even though it was flat in Q1, apparently was viewed positively by clients, especially given recent equity market drops. And their multi-strategy composite, that's generated a solid 10.6% annualized gross return over the last 2 years. Plus, their carried interest balance, that's their share of future profits from investments that grew 11% year over year to $865 million. That represents significant future earnings potential, even if actually realizing those profits, the activity there remains muted for now.
So what's really fascinating here is just how GCM Grosvenor is navigating this current environment. They're clearly leaning into their strengths, right? That robust fundraising machine that keeps pulling in capital across different strategies. And then there's that growing base of fee-paying AUM and the contracted capital providing that stable recurring revenue. In a volatile market where transaction fees can be all over the place, how much value should investors put on that consistent fee-related earnings growth?
That's really the core question, isn't it? The strategic push into individual investors and international markets, that's crucial for their long-term story. It broadens their client base, leverages their scalable investment engine, and the commentary about policy uncertainty hitting deployment but not fundraising, that highlights a potential disconnect. Investors are still committing capital to alternatives, you see, even if the pace of putting it to work slows down for a bit. This suggests a deep underlying demand for alternative assets, and GCM Grosvenor is, well, exceedingly well positioned to capture that over the long haul, especially as that $8.2 billion in contracted, not yet fee-paying AUM converts. So for you, it's really about understanding the compounding effect of that stable, recurring revenue, even if some of the lumpier fees, like carried interest, get delayed.
Right. Focus on the recurring engine. Okay, it's time for our This Is Not Financial Advice segment. This is where we pitch an outrageous but plausible trade idea based on the call. What have you got for us today?
Okay, well, given management's very explicit caution about short-term deployment and transaction levels being held back by policy uncertainty, a contrarian trade idea could be to actually bet on a rapid, maybe unexpected resolution to that trade and tax policy uncertainty.
Okay, so the outrageous part is basically betting against management's own short-term caution. How is that plausible, though?
Well, the plausibility kind of lies in the political calendar. As we head into the latter half of the year, things happen. There could be a stronger than expected push for policy clarity, maybe even some kind of resolution, perhaps even a bipartisan agreement pops up. If that happens, it would immediately remove that key bottleneck management themselves identified. And then, all that pent-up dry powder and investment appetite could lead to a really rapid acceleration in deployment and transaction activity. That would unlock more carried interest and incentive fees for GCM Grosvenor much quicker than anyone currently expects. So the trade. Maybe a long position in some out-of-the-money call options on GCMG expiring later this year. That could capture some leveraged upside if, policy visibility suddenly clears up.
Interesting contrarian play there. Okay, so just to recap our deep dive for you, GCM Grosvenor delivered a strong Q1. It was fueled by exceptional fundraising and really robust fee-related earnings growth. They're making these smart strategic moves into new distribution channels, new markets, and they're keeping their confidence high on that ambitious long-term goal, doubling FRE by 2028.
Yeah, and while they're keeping an eye on those short-term policy-driven slowdowns in deployment, their ability to consistently raise capital and convert that contracted AUM suggests, a really resilient business model. It seems built for long-term value creation, ready to capitalize whenever the macro picture gets a bit clearer.
Makes you wonder, doesn't it? If policy uncertainty is the main thing holding back even stronger deployment, what kind of explosion in activity could we see if those clouds suddenly part? Just remember, the information we discussed today is for informational purposes only. It is absolutely not financial advice. We hope this deep dive into GCM Grosvenor's earnings call has given you some valuable insights. Feel free to connect with us with any follow-up questions or observations you might have.